Hello everybody, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on March the 9th, 2020 with a daily Forex market analysis and live trading webinar for you. Before we get into it, we're going to have our disclaimer up here. It's just to remind you that this webinar is for illustrative and educational purposes only. Okay, now that you've seen that, let's go to our forex-trading-unlocked.com website. We have our workstation page already pulled up. Now, we don't even need to look at the numbers today with the volatility we've had so far in the Forex markets. Since the markets opened up on Sunday evening, there has been an amazing amount of volatility in all of the currency crosses. We're going to start out with the US dollar Turkish lira. This market has, I mean, talk about swinging around into a volatile trade here. What it's done in the past week and a half is pretty outrageous. So the question is, what is going on with the dollar? Well, we know that the Fed's color interest rate cut last week definitely stirred the markets a week ago. It's been a week now since last Tuesday when they did that. The volatility in all the markets continued all the way through into Friday. And obviously today, I mean, on a daily basis, this volatility is amazing considering that the U.S. stock market just opened up 15 minutes ago, and all this has been happening beforehand, irregardless of any type of numbers that are out. So what are we looking for right now? Well, we're looking for a signal, and we're looking for not necessarily a drop in volatility. We just need a signal. Things are so wide, and it's just everything's all over the place. So especially because of the weekend trade, I think that this is one of the reasons why we've had what we had over the past less than 24 hours of trading. So let's see how things shape up as the U.S. markets get a grip on things. But right now, I would say if you're on the sidelines, I would really wait for a signal. Bulls and bears, no matter what. I mean, the risk is all over the place. You try and short it, it's going against you. You try and buy it, it's going against you. The swings are just outrageous. So what we are looking for are some sort of balance points, so we know that this high up here as well as this swing low here, these are our key breakout points. But inside of that, I think you have to be very cautious with the volatility that's going on, especially in markets such as, let's move that up there. Okay, there we go. Such as the US dollar Turkish lira. Now to see some other lesser crosses. The reason we're doing this is just to give you a gauge of volatility. We have only a couple things and points to point out about a couple markets today because of the extremes. Here we go, US dollar, Mexican peso. So for all of those spring breakers that got off of school on Friday, or are getting off of school, this Friday rather, and are heading down to Mexico next week for spring break, it looks like if the peso stays where it's at, you just saved about 10% on your trip by having not gone a couple of weeks ago. And look at this volatility. Just today alone, the peso had opened up above 20 peso. Well, it settled above 20 pesos on Friday, but look at it, it opened up and just screamed all the way up to 22 pesos on the dollar. Just to give you an idea of how extreme this is of a move, we just pulled up the monthly chart. The last time that we saw 22, this is back in 2017. I actually happened to be in Mexico back in January of 2017. So I remember when the peso was up there around 21 pesos to the dollar, and since then it had been falling against that, basically trying to trade around 19 for the past few years. But boy, look at this. We had not made let's see, did we make a higher move high? We had a high of 22.03770, 22.06. We did make a newer move high. Look at that. So this bull trend of the US dollar Mexican peso that's been going on for quite some time has resumed in a very, very, very strong way. So let's pull up the daily chart once again here. And here we go. So yes, look at this extreme volatility. Now let's go to something a little bit north of Mexico, to the US dollar, Canadian dollar. Look at this gap. They say all gaps get filled, so I don't know if you shorted it anywhere up between now and where it shot up to. I mean, look at this. The market settled on Friday at $1.3420, and the market got up to a high of $1.3759 after the opening of yesterday's trade. I mean, look at this. The market's still positive on the day. Well, obviously positive because of the gap higher, but I mean, from the opening, the market is still positive on the day, and it had shot up all the way. That's a huge, huge, huge move. Any longs that had been in this move, boy, did they wake up this morning, or excuse me, go to bed before last night and be like, I wonder what's going to happen. Well, look at this. Geez, talk about a weekend gift. So, but we have a big gap to fill. The question is, are we going to spike down here, fill this gap, and then rally? I mean, this market, talk about not getting a gauge on it now. Obviously, it's been in a rally mode since the beginning of 2020. And look at that, too. We've had a low of, let's see, $1.2951 back on the last day of 2019. And the high today, once again, is $1.3759. That is an amazing move in the Canadian dollar over the course of just over, we're here on March the 9th. We're looking at 2 months and just over a week. That is some amazing volatility. Not to mention, it was incredible going up until last Friday, let alone what's happened just today alone. So now let's go and look at the Japanese yen. Like, talk about a market but has been a bull against the dollar for the past 2 weeks. Here we look at this gap. I mean, this market just pounding new move lows. So this volatility that we have here, these trends have been really pushed to an extreme over the past week and a half. And I mean, look at how this week is starting off. If today's trading is any indication as to how things are going to shape up over the next, couple sessions, let alone to the next couple weeks. We have some amazing volatility as we head into the last few weeks of the first quarter of 2020. We have not seen volatility or market action like this in the currencies in quite some time. It's going to be interesting to see how things shake up. But like today, if you're not already shorting in this trade, I would just stay away from this thing. I don't think that things are going to be necessarily calming down in the currency market, but you need to wait for some sort of extremes and some signals. There's no buy signal going on right now. Technically, this market's oversold. Fundamentally, even with what they did with the rate cut, this is extreme. So, but we shall see. Remember, markets go out like they come in. So the question is, you don't want to try and pick a turn here right now. Let's see how things shape up today, see how the U.S. stock market reacts to things. It's only been open for just over 20 minutes, to almost 25 minutes. So we still have a full day of trading. Let's see how that absorbs the shakeup of the currencies and all the other markets over the course of this evening or into this early morning of Monday. And then maybe we can get a gauge, because right now, unless you're already in these positions, I'm just warning you, stay away. This volatility is too extreme to just start gambling right now. You want to have a reason. Now, here, just to give you another reason why not to jump into a trade, the Australian dollar, US dollar, look at that spike. Everything else is rallying against the dollar. The Australian dollar collapsed against it, but then it came all the way back. It's positive on the day. So it's not positive from Friday, but it's positive on today, and especially with these extremes. I mean, for Christ's sakes, the market on Friday settled at 66.45. The low today is 63.14. So the market opened yesterday, tanked. So anyone that was long or even trying to buy into this move just got completely flushed out. And that's the thing, is we may not even see very much market action the rest of the day, because the whole world has been subjected to this for already over 12 hours. And what do you do with this? So like I said, I mean, these are extremes that have been hit, and the volatility is blowing everything out. Not to mention the machines had to be going absolutely nuts all night long for the algos. So New Zealand dollar, US dollar, let's take a look at this. Here's another market that just had an amazing extreme going on. And this is one of the risks you take with having foreign currencies on or futures on over the weekend. When you have options, your risk is always capped and limited. But when it comes to the outright derivatives, you have days like this. This is why you don't want to overtrade or trade above. That's why we're always about money management and trading to the right percentage of your portfolio, because when you load up and you think everything's humming along and it's great, you have a day like this. This is the kind of day that probably I would say has blown out a lot of accounts. You probably have a lot of blown out positions and a lot of blown out accounts, a lot of margin calls. So it's the kind of environment where that's why I said even today you may not see much action for the rest of the day just because of all the balancing and what's going on. And there may be some limited trading activity. So the machines are going, but then, like I said, once again, for those people with poorer money management skills and whatever, I think a lot of them are chasing checks right now than anything else. So we'll see how this day shapes up. Now let's go to the US dollar Swiss. This is a market that had been a bull against the dollar like crazy, and it certainly was going into today. I mean, look at this is another market where it's amazing the volatility that we have in the Swiss. Even when it's strong or weak, it doesn't usually have volatility like this. The market settled on Friday at 93.69. The low today was 91.82. So any shorts cleaned up are still up on the day right now because of the gap lower. But even this market, it came back. Now, does that mean the dollar is finding strength? Well, the Swiss is a bull versus most currencies and has been for months. It was struggling with the dollar for a little bit. Obviously, the last 2.5 weeks, it's just collapsed. I mean, we had a sell signal up here that we reached it a long time ago and stretched it out last week. Can't believe that we still, I mean, if we were still in this move, this would be a ridiculous capture. But that's another thing to think about. Since the high, we were here at 98.48, and once again, the low today was 91.82. That's a monstrous move in the Swiss franc. You just don't typically see moves like this extreme. I mean, I know that the Fed did what they did last Tuesday, but even still, I think these moves are overdone. So we got to see. We got to let things settle down and wait for a signal. If you're shorts, keep it tight. I'd be very careful having your stops. I would keep it around the close of last Friday. Anything above that, I think you're going to be in corrective territory. And with this volatility, I mean, just from what we've done today alone, I mean, we've had more action. We had a low, what was again, of 91.82 and a high of 93.37. So you're looking at a $2.50 range in a market that typically has, let's see, so that would be 250 pips. And let's see, something like this, a day like this, let's see, 96.52, 97, you're looking at half a dollar, maybe 60, 70 pip range. So in here we have a 3 times to 4 times as much of a range in today's session, and just over half a day. It's just crazy, including the past 3 sessions beforehand. There's just been no let up in sight on the volatility. So once again, here's another market. Wait for a signal, work your shorts. British pound US dollar. Now this is an interesting trade. I mean, talk about a grinding little sideways bear, and then all of a sudden in the past few sessions now here's the key thing is that the pound did make a higher move high by breaching this level here, but it hasn't taken out this key one here, which has been keeping the trend down and lower for a while. But speaking of trends, that's the other thing is look at what has happened over the past few sessions. The British pound US dollar, which has been a slow little grinding bear setting lower move lows and higher move highs, has done what? It's breached downward sloping resistance. It's made a higher move high. It's made even almost took out this high here. So right now, does this mean the trend is ready to stall here? I have no idea. There's so much volatility going on in the currencies right now. I wouldn't try and get in front of any freight train. So, but we'll see what kind of actions happen. I mean, it's Monday. A lot's going to happen this week, that's for sure. I mean, whether these trends continue or don't continue was one question, but the volatility along the way, I think, is going to be insane. So, range traders, I think range traders actually have a very good chance with selling into new highs and buying into new lows over the course of the next few sessions. You're just going to have some patience and wait for some real extremes. And I think that's the thing is that rational expectations before, where we were being very rational with our expectations of market movement and volatility, I think now things are picking up where we may start to see some, look at what's going on in this. We just look at the Swiss. These moves are so extreme. The peso, that was why we started out with the lesser currency crosses for this webinar, was just to show you how extreme these moves are. Like, I can't emphasize enough how the volatility factor is off the charts. So, and it's not slowing down. if anything, I think we really, I mean, I've been saying that volatility was going to be a part of 2020, but I didn't think it was going to be kicking us back into the old days, the way these markets used to swing, which is happy because the opportunities are good, but you really got to pick your points and then take your risk and know what your, evaluate your trades. And now let's go and look at the biggest component of the U.S. dollar index, the Euro US dollar, which has been on an absolute tear. Look at this. This is another market which had up until recently, you couldn't get a dollar range, let alone even a fifth. Even the Swiss was having more of a range than the Euro US dollar, which typically, as a whole, the average true range would be around somewhere around a dollar, between 80 and 100 pips. Now look at here, we had a gap just from the close of Friday, which was at 112.85 up to a high of 114.95. We had a $2 rally between the close of Friday and the high of the move so far today in the Euro US dollar. That's just insane. We have not seen this kind of buying pressure or selling pressure in the Euro US dollar in a very long time. So, and now with what's going on in Italy and whatever, see, that's the one thing I don't quite understand, is that I understand the dollar gets a little bit of a correction. It needed one. But the extreme nature of this move right now, what's going on with strength in the pound and the Swiss and even the euro, makes me wonder if this is not like the setup for almost like the sell before the dollar just really starts to crush these markets. Because with the coronavirus and everything, the flight to quality, I mean, who stands to survive and withstand this, what's going on with the slowdown? I mean, I think that while Europe is going to have all kinds of issues, and for sure it's already rearing its head in Italy and stuff, the U.S., I think we're more prepared, and not to be cocky or arrogant or anything like that. I think that we're more prepared for what's going on and have more resources, where I think that there's going to be, I mean, not that we're not, hopefully we don't have the problems that are going on in Italy, but it's most likely going to start in the U.S. as well. But I think that we will weather the storm as a whole, because our markets, no matter what, even though we still have a supply chain issue, our supply chain issues are not the biggest concern for us, because ours are more for wants than needs, whereas throughout the EU, they have their needs and their supply chains are going to start to get cut off. That's not good. The nice thing is that they're heading into springtime, so the weather's getting better. But as a whole, these are issues where I don't understand how Euro's strength, considering the weakness of their economic numbers, the forecast. I mean, this trend had been lower for the whole year, no matter what was going on with the rest of the world and even with the dollar. So for a turnaround like this, especially with what the U.S. Fed did last week, I understand that a little bit, but not to this extreme. This is, an amazing move. The low, once again, was $1.0777, and we had a high today of $1.1495. I mean, that's just, over $7 move in just in just a few weeks. I mean, this is from the middle of February. We're looking at February 20th to to March 9th. I mean, that is extreme. 3 weeks of trading, and we just exploded. We've had more volatility in the past 3 weeks, and here's something you really need to take into account. Remember, we started with the lesser currency crosses. We're ending with the euro, but look at this. Okay, so here is just the month of March alone. We have had a bigger range this month than any month that we've had since, May of 2018. So that's almost 2 years, and that was when we were coming off of these highs up around $1.26. So this market has been, in a bear market for quite some time, as you can see, making lower move lows and lower move highs. We just came off a lower move low last month, and now we have this monstrous rally. But don't think that just because this is happening and we made a lower move low and we're making higher move highs right now, that doesn't necessarily deem this market a bull. It could be, or this could be just a correction before it takes another slap lower. I mean, the reality is we found very, very good support here, but then, we still could have probed a little bit lower down to $1.05. with this coronavirus thing, it may not be outside of, we could see a turn of events here where we turn around $1.14, $1.15, and then boom, we're down at $1.05 and see a $10 break. I mean, look at the rally we've just had in 3 weeks. So if this is just a short-term correction, and remember, we made we were making lower move lows and lower move highs, which kept us bearish, kept us in the trend. Now we've made we have the neutral signal of lower move lows and but this still could be a lower move high. Remember, if you really want to look at it as far as are we breaking out to the upside in the bull, we have to get above $1.2584. We still have over $10 to go. Now, of course, at the volatility that we have right now, we could be there in not too long of a time. But once again, where is this euro strength coming from? The main thing is that can it be maintained? I don't think that it can. Anything is possible, and I'm a very big dollar bear and have been for months. But this is but there's different reasons for being a dollar bear right now with everything that's going on with the extreme fundamentals. I mean, even with the coronavirus. Why is it all of a sudden the dollar is all of a sudden a bear with the coronavirus? I don't understand. When the U.S., we have increased cases and whatever, but we don't have the issues going on what are going on in all these other countries as far as the mass quarantines. So until that happens, or maybe that's the thing is maybe once we hit the mass quarantines, that's when the dollar becomes a raging bull, because at that point it's going to be no matter what, the world will have to recognize it as a pandemic, where right now they're still not recognizing it, I guess, or it's kind of half the world sees it as it, but the World Health Organization doesn't want to call it that, but we'll see. We'll see how these numbers grow. Hopefully they're for the better. Hopefully springtime knocks it out and we get into some more natural flowing markets, because this is kind of crazy that a fundamental such as the coronavirus is actually throwing stuff around. I mean, we have oil that's collapsing and stuff, which is good. So the one thing is we have raw commodities, not necessarily for lack of use, but for whatever reasons, are keeping certain variables down. So while markets and companies are losing money to sales, costs are definitely dropping. So the question is, are costs dropping faster than sales? If they are, maybe there's some sustainability in as far as how a lot of corporations and business function, especially on hard goods. So we don't really have anything else to tell you except for that, except for today. Like I would tell you that unless you're already in the trend on the right, stay out for the rest of today. Wait for a sign, wait for a signal, because we just have too much to absorb. We've had an amazing amount of market action. We've had more market action in the past like 14 hours than we've seen in 14 months in any of the currencies, So that's just where we stand right now. It is a wild and woolly trade for all of you inexperienced and undercapitalized traders. I'm just telling you right now, stay out, period. Do not bother with these markets. You're going to get chewed up. For more experienced traders and with people with strong money management models and people who can understand the risk levels you have to take with this kind of volatility. I mean, you're no longer, your risk reward ratios are there, but your risk is extreme. So you have to be prepared for that. So you're not going to be able to play in this kind of volatility until things start to subside a little bit, which they will. They for sure will. And remember, just as markets go, they always go out like they come in, or typically. So consider this. Look at the volatility we had. We had this coming down. We had this extreme break, which just neutralized it, had a little pause, and here we've had this explosion. So let's just, for hypothetical speak here, let's say that tomorrow, hypothetically, the market trades a little higher, or tomorrow is the day it begins to turn. So with this kind of volatility, not that it's going to come all the way back down to 108. It could. The whole bear market could come back, and we could be trading down at 105, and like I said, have a $10 slide yet. Or we could come back towards this 110 area, somewhere in between here. A 50% retracement is very normal in the markets anyhow. So just if we had a correction here, how long would it take to do that? Well, a 50% retracement with this kind of volatility, this could happen in a week. So if we were just to go from where we're at trading at now down to this support line here in the next week, that will be more volatility and market action in the period of 2 weeks time, 3 weeks time than we've had in a year and a half. That's amazing just to think about the concept of how this market is starting to swing. And it's done this before. It's just been the euro has been in a very tight trade for a while, and it's been winding down for months. I mean, the fact against once again, like I said, in the when we looked at the Swiss has had more volatility on many days than the euro, which is just not normal. The euro is a bigger contract, and now it is really kicking up its heels. We will see how things continue to manifest. And with that, I want to thank you very much for your time. Always check us out here at forex-trading-unlocked.com. Your key to online trading. And also, if you want to read a good book on how to buy and sell signals, since right now you're looking to wait for some, read the book High Probable Japanese Candlestick Patterns. It's available on Kindle and paperback on Amazon.com. And with it, you can utilize the best buy and sell patterns used for over 400 years. Give yourself a competitive edge against the markets. And with that, I will say thank you very much once again, and we will see you soon.